Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only and should not be considered as personalized financial, investment, or trading advice.
Welcome back, traders. Today is Saturday. It's about 8:36 p.m., the 23rd of August, 2025. And it's another week, and we have to analyze the charts and see what is tradable and what the market direction generally is in the next coming week. A recap of analysis last week would be helpful. I think analysis on Bitcoin played out perfectly. XPX and the Nasdaq, we had our first side of our analysis coming out well, and my impatience actually caused me to close out the trade before Friday's epic move. However, I did note also that the bounces were opportunities to offload some of my longs. Well, it's another week, and let's see what these charts would present. Gold was still sideways for the week. And I want to start today's week's analysis with the Dixie. We're going to start off on the weekly time frame, as we can note here, right here. So Dixie spoofed us off in the beginning or the early part of the week. It went beyond my expected rise. My expected rise on the Dixie from last week's analysis was somewhere right here, which is the 97.6 to 97.8 zone. I wasn't expecting it to break this structure, but during the course of the week, we did break above the structure. It spooked me out for a minute, only to realize that the analysis was on point. I did realize that I didn't do my retrace measurement quite well. And if you do a Fibonacci retrace from this level to this level, this came right to the 38.2 retrace level. My initial analysis, I had done the 0.236 because the momentum down was so strong. I wasn't expecting it to make it move up here. So lessons learned. Sometimes it's best to let the week play out and not cut lose your trade too quickly, as this would have turned a very profitable trade, uh, for me if I had stayed through the entire course. Well, this week we have this fat red candle printed on Friday, and if you step it down to the weekly, we're getting the rejection of value from the very retrace level of the 0.382. So I expect this to continue going down. And the view of our indicators, our cycle turned down about 28th of July, a week after we had this long candle. And stochastic cycle on the weekly is still pointing downwards. So I expect this to continue going down. Um, Target wise, I would step down to the daily, and we definitely coming below this red candle. Now there will be a little bounce into the candle, as this was a very high velocity candle, similar to what we had here. High velocity candle, you had a little bounce the next day, recovering part of the week, but then we continue coming down. So I'm expecting a similar move to happen on the Dixie, similar to this. But then there's some other structure that I'm observing here that looks very interesting to watch. I think this technically is forming a head and shoulder pattern, where this is your left shoulder, this is your head, and this is the right shoulder, and this is your neckline. So definitely we've already broken below the neckline. We'll pretty much go test this neckline. So I expect price in the beginning of the week to push up into this neckline and then fall off down to this target zone, which is somewhere around 96.692. I think maybe 96.7 definitely is my target zone on the Dixie. Now, when we step down to the intraday 4-hour chart, you would understand why I think that there will be a little bit bounce before we already having this red hammer here. Now, even though it's a red candle, it's still a hammer, suggesting that prices are being absorbed. The other thing that I'm observing from this 4 hour setup, confirming that little bounce is probably likely, is that we are also outside our Bollinger Band as well as our KC band, and we are having some rejection of value outside the bank, just saying that the sell-off was really overstretched. I mean, we moved all the way from somewhere around 98 or a little bit over 98.3 all the way to 97.2. That's a good stretch. I mean, this move covers all these candles that happened from somewhere around August 17th all the way up to 22nd of August. This one candle just erased everything here. So yeah, I do expect a little bounce on the dollar, but continuation down to the target zone 96.72.